Good morning and welcome to the early bird. And here we're looking at the S&P 500. Just because it's a bit of a cleaner chart, the Dow would be the same as well. And of course, in their own ways, they would reflect through to other indices. And look, there's a couple of basic points here that we've been working with through this unfolding pattern here. And the main thing is a couple of main points. First one being that it's diminishing into a triangle pattern, and out of a triangle pattern, a market normally has a next strong move because it's a little bit like a spring sort of occurring. And I was hoping by Tuesday that we would have a bit of a break either way, with a bit of a bias to the downside and breaking of the 1300 here and the 12,000 on the Dow. Either that or a pattern in here that would be able to recognize with some sort of clarity and purpose and meaning. But unfortunately, none of those have happened just yet. So we're still in the situation of being patient, but we need to be prepared for a move either way, even though the larger sort of Elliott count coming back up to this point here would have this as pointing down. But till I can confirm that within the pattern itself, then I'm a bit reluctant to say that. So on the bullish side of things, as we've had here right from the beginning, is that this would be the A wave down to here, the B wave to here, and the C wave to here. Okay, so then from that there, and a bullish count from that point would have that up as wave one and that there as wave two, and we'll be looking for a 5-wave structure moving pretty much straight up from here with any luck. So that would move straight up there. So this would actually be up for one, back for two, up for three, coming up to here. So that 133 there and would be the breaking out of that point. That's the bullish count, and the bearish count is having this down for wave one here, back for wave two to here, and then down for one here, back for two here, and then down for one here with an A and a B and maybe a C here. I just don't know. It's just not clear enough. So we just really sort of have to wait a little bit longer, and the same with the Dow Jones as well. So on the Dow Jones here, it's a little bit messier here, but one thing I did want to point out here is that yes, the 12,000 is the support and the 12,300 is the resistance, and then we're really working with the 12,100 and the 12,200 here. So just having a quick look here, it seems that the 12,150 through here is pretty much the balance point within that, with the market swinging either side to that. Sure, the 12,172 would be in here, and at the moment we're seeing support or the market play out across this 12,200 there, but we also know that as the 33 on the S&P 500, the 12,272 here would be the problem there. So just zooming in further here on the 2-minute chart here, we can see that there's a 12.2 there. Just bear with me a little bit. So the 12.272 and the 12.3, this is the really strong resistance there. So we could expect a little 5-wave structure up into this area here and then have problems from that point there. So we'll see the futures drift during the day there. Also, the financials are the ones that have pushed this to the upside there, and I was noticing yesterday on ANZ, and I looked this morning on WBC as well. There's due for a bit of a rally there as well. We'll have a look at that in a moment. But also, I want to point out that in finding sort of breakouts in these sort of important sort of little areas here that we're sort of waiting for, normally can come up in other markets. And as we know that the euro has some harmony with the S&P 500. but that's not giving any clues away either at this point in time. But I just do want to flip over there now because we're sort of talking about this. So with the euro, this is the top in the euro for the people that don't trade the euro here. So this is the current high here. So the situation with the euro is that it does, this and the S&P 500 have a relationship. And what we're sort of looking at here is that we're looking at this move down through here as being, well, we need to see what it is first. But at the moment, it's in three waves. There's a little A, B, and C wave down here. So that would be a corrective bullish pattern. So the market would go up for one, back for two, up for three, four, five, move up from there. Or if this pattern turns into this three wave pattern here, turns into five waves, which would be 1, 2, 3, 4, and 5 down here, then we'd have 5 waves down. And what that would mean is that we would get another 5 waves after we get an A, B, C correction here. So then we'll get another 5. So if the euro makes a new low under here, then this is a 15-minute chart. If it makes a new low under here, then we know that we've got a bigger bearish picture in fold here. So the euro and the S&P will have some sort of relationship. The inverse to this market here would be the US dollar index. And the US dollar index, just bear with me a second. Okay, here's the US dollar index, and as the euro had its high at above 140 there, this has got this low here. Now this is on 10-minute charts. So what we're looking at here is we're looking up for wave 1, little A, B, C for wave 2, and then the third wave moving up through here. So this would be the fourth wave sitting here at 76, 72. Now, if this price, this price here comes below the top of this one here on the actual futures, this is a continuation contract here, but on the actual current futures contract, if this came below the 76.55, then this move up would be a corrective pattern. And that means if this came down through here, that'd be a corrective pattern, and there would be at some stage there would be further downside to this. So if this was going to come down, then the euro would be going up and the S&P 500 would be going up as well with me. But as long as this stays intact here, we'd have up for 1, back for 2, up for 3, back for 4. Wave 4 can get complicated. There could be 3 swings in here like this before it goes up. But if we do get that 5th wave up here, a new high here, because there's 5 waves in here in terms of 1, 2, 3, 4, and 5, 4, and 1, 2, 3, 4, 5, 5. So that is a 3rd wave. So if we get a new high here in the US dollar index, that would give us 5 waves to the upside. That would make the euro weak and the S&P 500 weak. That's about the best lead that I can get from the markets without making it more complicated with the bonds and whatnot. So, yeah, that's sort of it there. I know that's a bit confusing, but we'll see. It's there. It just gives us a clear number. So that's 76.55. If we see the euro, the US dollar index come below this, then we'll know what the other markets are doing. But, you know, the S&P 500 may make the move before this does as well. So, you know, they're just trying to pick up a lead. Even if we can pick up a lead half a day early or even a bit earlier, that would be terrific. Okay, so coming back onto the indices here, I want to have a look at our local market here in 2 ways. First of all, this is the cash market, the ASX 200, and you can see that, you know, it's it's pulled down a long way and it's sitting on the 4,800. We could see a move coming back up here today. There'll be a bit of strength in the market today. The 62 here percent, 61.8, is the 48.30 here. That's from that high there to that low there and back up there. So that would be the resistance point there. We've got this overhead trend line coming down through here. So even though that we're sort of up and we will be up sort of here, we still need to sort of acknowledge that, this is still sinking through here. It's trying to get back up. It will meet resistance at this 48.30 and this trend line through here. So this is an area to watch on the actual cash market, okay? The futures market, the S&P, SPY rather, any being above the 4,800 here would be looking for a move. It'll wave 2 further up into this area here, the 62.76 mark there, from this retracement level coming back up here in an A and a B and a C coming back up here. And this is what would be also, we're looking at a bit of we've had that strong move down in copper, which we'll have a look at in a moment. So we're going to see a bit of a rally in that as well, and I'll look at that in a moment when we look at crude and gold and so forth. So we will see that that sort of bit of a strength there, but not a lot of strength. It was the financials that moved the US markets last night. And not the base metals. Base metals are mixed. BHP in the US is still softer, rather than in positive territory. So we're not going to see a lot of strength come from the resource sector. So we've got BHP and Rio that can take up pretty much 50% of the index in its movements there. So we're not going to see that. It's going to be driven by the banks. So in that being driven by the banks and looking at I was looking at this market yesterday. This is just ANZ here. Let's take the volume off. So we were looking at this as being down for wave 1. This is the high in the ANZ here. So we've got wave 1, wave 2, we've got the third wave down to here. So there's 5 waves in this one here for the 3, the 4. And then the 5th wave down to here has also got 5 waves in it. The 1, the 2, another 5 waves in the 3rd to here, the 4th and the 5th. So we'll see A, B and C here. Now it may not get up this high here because this is where the supply is here. But we should expect to see some sort of rally within here before we see another move down. Because we've got 5 waves down here, after whatever rally we get through here, there'll be another 5 down. If this pulls back up, way back up here, into an ABC back up here, then it would probably rest back down onto the 24 there. But we're looking for an A, a B and a C wave at least, or down for wave 1, back for wave 2 like the indices, and then down for wave 3. And this would be the same with WBC here. The Commonwealth Bank, one of the leading ones, a little bit more complicated than this, so I'm not going to bring that into the picture. But here we've got a clear 5 waves down. It looks like I was tracking this some time ago, actually. So so we're looking for, that's the A, the B and the C in this particular case coming up here. So we could probably look to short this at 23.72 in this little sort of area here. But once again, so this one's further into the rally than the ANZ. But point being is that these banks that we've had coming down here are looking to have their rallies, are half in their rallies, starting their rallies, and the US markets were driven by the finance sector last night. So that's what we'll be sort of looking at there. The other drivers, of course, are these markets here. So this is the oil market here, and this does appear to be, this little pattern in here does appear to be corrective here. Yep, so we could still continue to label this wave 3 and wave 4 here for the crude here. We would look for these swings across the 105 level as we discussed yesterday. So you can see this little sort of pattern here. So we'd be getting, it can cross like sort of 5 times. So that's what we're kind of considering here. Give this a little bit more time here. If this does find support on 105, then find support on 106, starts moving up from there, then we know you've got a bullish run, and you would expect this high to be taken out. You would expect to see profit taking at the 108 there. I'm not sure about last night where we're up to with the Middle East situation unfolding there, but we'll see the 105 here as support or resistance over the next session will dictate the next move in this here. And if this does move up, then we'll also see gold move up as well. So the gold here at the moment, if we just wind this in here, not sure what that is, just bear with me. So this, if the price with gold here, if the price comes down under the 20 here, this is group 1 here, 10, 20 and 30, and this is how it normally sort of plays out. A move under the 20 here would see the price not only back at 1400 but down at 390, or we normally look at the next level down here at 1380. So it is important. This is an important little number across here at this stage, right? It's okay for it to spike there, but it's got to find support on it and then move up from there. So a locking under the 1420 there is where the problem for gold really starts. Now, what it's doing here at the moment, and what it normally does, is that the distance that travels above the level here is normally the distance that travels below. That's why we'll sort of keep the 1420 in mind here. But essentially, this is moving across the 1430 level here, which is the top of subgroup 1, group 1, 10, 20 and 30. So we can expect these swings to move across here. If after it's done its swinging and it's got support there, then we can look for this market to move up. So really, you just need to give this a little bit more time to work across the 430 there. Once it's got support there and you can see it there, then you can start putting at the stop at 1427 once you've got a good retested support there, like this here. It's sort of retested it and then starts to move up like that. Then you can pop the stop up there and run up to the next level. The next level in this case would be the 1450 there, and there you'd have to expect some sort of correction across there. If stock does move down as well, then, because we talked about these being in harmony yesterday, so if US stocks do move down from in that pattern, that narrowing pattern that we're looking at, then we'll also see gold shoot up here as well. So US stocks being up and also the US dollar index being up will put pressure to the downside on this market here. So you need to be aware of that. You need to accommodate those in your analysis and work with the levels there. So you've got those fundamentals happening. You've got your Elliott wave, which is terrific, but use support and resistance to actually trade off. Okay, the copper market. Might just squash this in a bit, just so we can just have a look at the bigger picture for a moment. Right. Okay, so we've been sort of zooming in around here for the situation here, and then we've seen it drop over the last 2 sessions over through here, and we'll look at that in a moment. But in the bigger picture, this is the current high we're looking at up here. So we were looking for this to be wave 1 down to here, yep, and then wave 2 back to here. Right, and then this would be the wave 3 moving down to the downside, and that would be 5 waves down for wave 1, back for wave 2, and then further down for wave 3. So that's a real possibility, and that would line up with the bearish count on the Dow Jones and S&P 500, etc. The flip side to this as well, and we're not sort of getting any leads here as well from this, would be the same as I pointed out on the S&P 500 as well. So we would be looking for an A wave, a B wave, and a C wave into this little area here. And then from here, then we would see a push up from there. So that's what we're sort of looking at here. So as a bearish scenario, and also this as a bullish corrective pattern. They're both valid. However, we're swinging to the bearish side because of the wave count we've got to the top here so far, and also moves like this to the downside here have been pretty fast, you know. So so just sort of catching up on this sort of wave structure here that we're looking at is there's a couple of ways to see this, but whichever way we look at it, this would be a third wave in the middle here. So at this stage here, looking at this as being down for wave 1, wave 2 to here, then wave 1, 2, 3, 4, and 5 to here, and then a wave 4 back. A wave 4 back would be the 38.2 retracement level, or to the third, fourth wave of 1 lesser degree, which is this guy here. So the 435 here is also the 38.2 retracement level from this wave 2 here down to here, so 40% retracement. So we should see this struggle as a wave 4 to this point here. So let's see how we go there. Then looking for a wave 5 down to the 420 there. So yeah, but wave 4s here can get quite complicated. They can be like an A, then a B wave and a C wave, even turn into a triangle, and many other corrections as well. So once again, we need to allow this to sort of play out here, and that's what we'll do there. The other wave count that's a possibility is that this is actually wave 1 to here, an A and a B and a C here for wave 2, and then the wave 3 down to here, the wave 4 and the wave 5 here, and we pull back to 61.8 retracement level up here. So either way we go, we need to allow this to play out. But if this does push up from here as a wave C here, as mentioned here, like that, then we will see the Australian dollar push up. If this is an A and a B and a C wave, then we'll see, as mentioned, the Australian dollar. Just find this here for us. It's a 5 minute. Okay, this is a bit 1 hour chart here. This has been a bit of a complicated situation here, but we'll stay with it. There's a chance here for the Australian dollar to push up. So we've got up, we're looking at this as wave 1, and then wave 2 back to this point here. This correction has got sort of rather complicated, but that's okay. We'll stay with it until proven otherwise. So then we would be looking for this wave, a wave 1 up to here, wave 2, basically a push up from this low here. If this low gets taken out here at the 10072, then we've got a problem there. So having a look at this little section here on a 5 minute chart here in a second, we'll check that out. But as it stands, if copper does push up into a strong situation, then we've got wave 1, wave 2 here, and then wave 3 would be going up. So on this, checking out this here on a 5 minute scale here, would be looking, that's the low there. Okay, so we'd be looking at this as, I can't really see that there just yet. 1, 2, 1, 2, 3, 4. That may be 5 waves to there. I need to have a look on a 2 minute chart to pull that apart. So this could be the wave 1 up, then wave 2 coming back. So we can expect it to come back 61.8% from there, coming back down here. This is obviously the support here. So we can expect it to come, in around here. So whatever it is, allow it to play out in here. And if it plays out in here and then gets back up on here, then that would be the point to go long at. So allowing this to do its correction here. Yeah, allowing this correction to unfold, 61.8% back down here. And if it finds that here and then pushes up and gets support back up there again, that would be a really nice trade to go long from up there. So we're getting there. So we could be looking at this as up for 1, back for 2, and then getting up. If it breaks through, if this doesn't come back down through here and create something in here, and nice clean break from this 101 here, then the other way to trade this is from the subgroups here, up here. So this 1, 2, and 3 here is where you'd be adding to the long side through here. Okay, and keeping the stop under here. But it would be nice if this plays out here first, then gets back up, because this would be a retest. This is the breakout, the retest back in, and if that's good, then the push up through here. So seeing it under here is actually quite a good thing. So it's going down, checking to see where the support is. So okay, and the same with the euro as well. Just have a look at the bigger picture on the euro here. So with the euro here, we were looking at 5 waves down, then A, B, C for wave 2, down for wave 3, back for wave 4. Wave 4 can get quite sort of complicated across here. We'd see at least 5 swings across here. So this would be 1 swing here. Yep, that's 1 swing across. That's 2 across. That's 3 across. 4 across and 5 across. So that's what I mean by that. So as a bearish scenario, we want to see 1, 2, 3, 4, and then 5 come down here, making a new low. That 5 waves there would be the beginning of a much larger 5 waves to the downside. So it would be 5 down, 3 back up here, and then another big 5 down. So that's what we're looking for there. As it stands at the moment, this is a bullish correction in a bullish market with an A and a B and a C wave to here. And if that's going to be the case, then we would need to consider this up for wave 1, back for wave 2, and then up for wave 3 through here. And that being the case, we'd look at the 2-minute chart here. So we would look at this as being up for wave 1 to here, and an A and a B and a C back coming through here. So like the Australian dollar, if we can see this come down, soften down in here and checking in this, because obviously demand here, and this is supply here, buyers have come in here, pushed it up, people have jumped in. So it needs to drift back down here for value buyers to pick it up at the second point here and then push it up through here. If we're wrong at this point here, then you start scaling in on this 3, 9, 10 here. Once that becomes support, it's tried to become support here. The breakout is not that important. It's the retest that's more important to find support. So it's been trying to do that there. But if it breaks through the next time there, just go for it at that point. Yeah. All right, that's it. So just a quick little recap there without too much there. This is the S&P 500. It's still working itself into this narrow range here. We need to give it a bit of time through here. But we should see a nice spring happen either way here. Jumping early, just remember anything that you do early in the piece is consider it higher risk, and you should use smaller position sizes within that. 133 break up here or above this little area here, these highs here, then that would be a clear break to the upside, and you could run with that. And the same with the Dow Jones here at these 12,772 would be the first trigger at finding support on that, and then the 12,300. So we've got time. We just need to see it develop a little bit further. We can see the 12.2 here is going to be the first little support here. We know the balance line here is at the 12.150 here. So being up here, we can consider it short-term bullish, but be very careful about this because it can still continue to narrow in, and we haven't got a break from this just yet. So yeah, alrighty. Well, good morning and good luck.